This trading strategy that I'm going to show you today is so simple and easy to use that even if you are a beginner trader, you can still be profitable. And I know it sounds hard to believe, but trust me that at the end of this video, you'll be a profitable trader if you follow the steps that I'm going to show you today in this video. Now, without any further ado, let's get started. But before we do that, please make sure to subscribe to my channel, as this channel is currently new and I'm trying to post consistently by bringing you new indicators and strategies every week. Three most important things in any financial market are the trend of the market. As you can see, the market is here in bullish trend. The volatility in the market, that means if there is enough liquidity in the market that our trades that whatever will place will be fulfilled. And also the trend direction. For example, if the trend is going upward, it must be in the bullish direction, and if it's going downward, as we can see here, it's in the bearish direction. And we're going to use these three most basic concepts of any financial market in this trading strategy that we're going to talk about today. So first of all, let's go ahead and add the indicators that we're going to need for this strategy. And the first indicator that we're going to add is, first of all, we're going to go to the indicator tab, and here we're going to search for exponential moving average. Now this indicator is pretty simple, but it's very powerful because we're going to use this indicator to detect the momentum of the market. So let's go to the indicator settings, and here we're going to change the length from 9 to 21. So this will be our fast moving average, and we're going to change its color from blue to this yellow, and also we're going to increase the thickness of this line. Now let's go ahead and change the settings of the second EMA, and we're going to increase its length from 9 to 51. So this will be our slow move exponential moving average, and also we're going to go towards its setting and change the color so that we can see it a little bit better, and also make it thicker. Now let's hit OK, and you can see that whenever the price action is happening below this crossover, for example, here we can see that the fast period EMA is below this slow period EMA, and the market is in bearish momentum. And also if you look here, we can see that the fast period EMA is above the slow period EMA, and the market is in bullish momentum. So we'll be using this exponential moving average to detect the momentum in the market. Now let's go ahead and add the second indicator that we're going to need for this strategy, and that indicator is the SuperTrend indicator. This indicator will help us identify and give us the buy and sell signals based upon the direction of the trend. Now let's go towards this indicator setting, and here we're going to turn off all these settings and only keep the buy and sell labels, because we're going to use this as our signal indicator. And let's change these settings from absolute to below bar, and we're going to change the sell from absolute to above bar, so that the signals will move a little bit closer, and we're not gonna mess up, and we're not gonna change anything in the inputs here. So let's hit OK. Now the third most important thing, as we talked about earlier in any financial market, is its volatility. So we're going to go towards the indicator tab, and here we're going to search for the volatility oscillator or volatility relative volatility index, and we're going to add this one to the chart. Now once this indicator is added, we can see that there is an oscillator, and then there is the moving average of this relative volatility, and we're going to go towards the settings of this indicator, and we're going to change the input of this MA type from SMA to EMA, and also we're going to change this length from 10 to 14 so that it will be a little bit more accurate. And now we're going to leave everything else. Now all the indicators have been set up. Let's talk about the trading strategy that we're going to use for our trades. Now let's go ahead and talk about the trading rules for taking short positions. And the first rule is that the price action must be happening below these EMA lines. As we can see, this is the slow EMA and this is the fast EMA, and here in this case here we can see the price action is happening below these EMA lines. The second rule is that there should be a sell signal issued by the SuperTrend indicator, and the third rule is that this fast period EMA must be below this slow period EMA. As we can see, this is true here as well. And the last and final condition that we need to check is this oscillator of the relative volatility should be below this EMA. This would mean that there is enough sell volatility, and we can go ahead and take a short position at the close of this candle here. So let's go ahead and put our short position at the close of this candle, and we're gonna put our stop loss at the last swing high, and we're gonna target 1.5 restore ratio. So let me just go ahead and set our take profit level, and as we can see here, our take profit level would be somewhere around here. And let me just move the market forward, so we can see our take profit level has been hit here, and this trade is a profit of 1.5 raised to our ratio. Now let's go ahead and take a look at another example of taking short positions. So we can see here that the price action is happening below these EMA lines, and the fast EMA is below this slow period EMA. So the overall trend in the market or overall momentum is in seller's favor. And also there is a sell signal issued by the SuperTrend indicator, and at the candle where the sell signal is issued, the oscillator, the relative volatility oscillator, is below this EMA of the oscillator. So this is a favorable condition for taking short position, and we can go ahead and put our entry at the close of this candle here, and we can put our stop loss either above this EMA, the slow period EMA, or above this swing high. It depends upon your risk appetite and also upon your risk tolerance. So I'm just going to put the stop loss above this slow period EMA, and again we're going to target 1.5 risk to ratio. So let me just go ahead and put our take profit level here, and as you can see, this trade is again a profit. Let's also go ahead and check if we put our stop loss above this swing high, and now let's see if our take profit level gets hit. So let me just go ahead and adjust our take profit level, and as you can see, again, even with the higher stop loss, our take profit level has been hit. So again, this is a trade of 1.5 risk to ratio in profit. Now let's go ahead and talk about the trading rules for taking long position. The first rule is that the price action must be happening above these EMA lines. So as we can see here in this condition, the EMA lines are here and the price action is happening above these EMA lines in this area here. The second condition is that the fast period EMA should be above this slow period EMA that is red in color. So this would mean that the overall momentum is in buyer's favors and market is likely to move in the bullish direction. And the third and final condition is that this relative volatility oscillator should be above this exponential moving average of the relative volatility. Now once these conditions are met, we can go ahead and take a long position at the close of this candle where the buy signal is issued. So let me just go ahead and put our entry at the close of this candle here, and again we can put our stop loss either at this slow period EMA or below this recent swing low. And let me just go ahead and set our take profit level at 1.5 risk to ratio, and as we can see here, our 1.5 risk to ratio take profit has been met, and this trade is a profitable trade of 1.5 risk to ratio. So this is how you can use this very simple trading strategy to make profits in any financial market. I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you guys in the next video. Thank you.